Good morning, America. As the sun rises over our cities and towns, a new day brings fresh opportunities and new questions about the state of our economy. It's Tuesday, September 16th, 2025, and there's a lot happening in the world of money that could affect your family and your future. Whether you're planning for a big purchase, saving for college, or just trying to make ends meet, the financial headlines today matter more than ever. Today, everyone from Wall Street experts to everyday people is watching the markets closely. The stakes are high, and the mood is a mix of anticipation and caution. Across the country, analysts are poring over data, and business owners are keeping a close eye on their bottom lines, all trying to read the signals and prepare for what's next. The stock market started the day with a positive feeling, following a strong finish yesterday. Investors are hoping that momentum will continue, but they know that today's news could change everything. Investors are hopeful, but they're waiting for two big pieces of news that could set the tone for the rest of the week, and maybe even the rest of the year. First, the Federal Reserve is meeting to decide on interest rates. This is a decision that can ripple through the entire economy, affecting everything from the cost of borrowing to the value of your savings. Second, we're about to get the latest report on retail sales, how much Americans are shopping, spending, and feeling about their financial security. Retail sales are a window into the confidence of everyday people. These two updates will give us a clearer idea of where the economy is heading. Are we on the path to growth, or are there signs of trouble ahead? Economists and policymakers will be watching these numbers closely. The Fed's decision could change the interest rate on your credit card or mortgage. That means your monthly payments could go up or down, directly impacting your household budget. Retail sales show how confident people are about their jobs and savings. When people feel secure, they spend more, which helps businesses grow and creates more jobs. But if people start to pull back, it can be a warning sign that tougher times may be ahead. That's why these numbers matter to everyone, not just investors. These aren't just numbers. They impact your wallet and your future. From the price of groceries to the interest on your loans, today's decisions will shape the months to come. Right now, the markets are cautious but optimistic, waiting for official announcements. There's a sense that anything could happen, and everyone is bracing for the news. It's a bit like waiting for the weather report before planning a big event. You need that final confirmation before making your next move. So let's dive into the first big story, the Federal Reserve's meeting. Their decision today could set the tone for the entire financial landscape. What will they decide, and how will it affect you? Stay with us as we break down what's at stake and what it could mean for your money, your plans, and your peace of mind. The Federal Open Market Committee, or FOMC, is meeting right now, and the stakes couldn't be higher. This group of policymakers is responsible for setting the direction of the U.S. economy, and their decisions are closely watched by investors, businesses, and everyday Americans alike. In just a short while, they'll announce whether they're cutting interest rates, a move that could have far-reaching consequences. The financial world is abuzz with speculation, as everyone tries to predict what the Fed will do next. Most experts expect a small cut, about 0.25 percentage point. While that might sound minor, even a slight change can send ripples through the markets and affect millions of people. This move is meant to give the economy a boost, making it cheaper to borrow for things like homes, cars, and business investments. Lower rates can encourage families to buy their first house, help entrepreneurs expand, and make it easier for companies to hire new workers. The Fed is watching for signs of a slowdown, and a rate cut could encourage more spending. When borrowing is less expensive, consumers are more likely to make big purchases, and businesses may invest in growth. But it's a delicate balancing act. Cut too much, and inflation could rise, making everyday goods more expensive. Do too little, and economic growth could stall, leading to job losses and lower confidence. The committee will weigh all the latest data, including retail sales, job numbers, and global economic trends, before making their call. Every indicator is scrutinized to ensure the right move is made. Their decision will impact everything from your mortgage to your credit card rates, student loans, and even the interest you earn on your savings account. It touches nearly every aspect of personal finance. That's why the financial world is hanging on every word, with analysts, journalists, and investors all waiting for clues about the future. Tomorrow's announcement will set the tone for the months ahead, influencing everything from stock prices to the cost of borrowing for businesses and families. Will the Fed act decisively or take a wait-and-see approach? The answer could shape economic confidence and strategy for the rest of the year. Either way, the effects will ripple through the entire economy, touching businesses large and small and affecting the daily lives of millions of Americans. Stay tuned for the outcome, as the nation waits to see what the future holds. Now, let's talk about shopping, specifically the retail sales report. You might not think about it when you're picking up groceries or browsing online, but every purchase you make is part of a much bigger story. The retail sales report is one of the most closely watched economic indicators in the U.S., and for good reason. This monthly report is like a giant receipt for the whole country, showing how much Americans spent at stores and online. It covers everything from clothing and electronics to cars and restaurant meals, giving us a detailed look at what people are buying and how much they're willing to spend. Consumer spending is the main engine of the U.S. economy, making up about 2/3 of all activity. When people open their wallets, businesses thrive, jobs are created, and the economy grows. But when spending slows, it can be a warning sign that trouble is ahead. For August, experts predict a small increase in retail sales, slower than July's growth. This might sound minor, but even a slight change can have ripple effects across the economy, influencing everything from stock prices to government policy. A slowdown suggests people are being more careful with their money. Maybe they're worried about their jobs, or perhaps they're feeling the pinch from higher prices at the pump or the grocery store. This is one reason the Fed is considering a rate cut. When spending slows, the Federal Reserve may lower interest rates to encourage borrowing and boost economic activity. People might be spending less due to job worries or concerns about rising prices. If folks are anxious about layoffs or see their paychecks stretched thin, they're more likely to hold off on non-essential purchases. Tariffs and inflation fears can make shoppers hold back on big purchases. When the cost of goods rises because of trade disputes or inflation, families often delay buying things like appliances, cars, or electronics. If retail sales are stronger than expected, it could mean the economy is healthier than we thought. Robust sales suggest that consumers feel secure in their jobs and optimistic about the future, which can drive even more growth. If weaker, it puts more pressure on the Fed to act. Policymakers may need to step in with rate cuts or other measures to keep the economy on track and prevent a slowdown from turning into a recession. This number is a key clue to how confident Americans feel. When people are upbeat about their finances, they're more likely to spend, which keeps the economic engine running smoothly. So, the next time you hear about the retail sales report, remember, it's more than just numbers. It's a snapshot of our economic mood, a reflection of our hopes and worries, and a signal that helps guide decisions from Wall Street to Washington to your own kitchen table. Beyond spending, how we feel about our money matters too. Consumer sentiment, a measure of our collective financial mood, just hit its lowest point since May. People are feeling more anxious, worried about jobs, rising costs, and the future. When confidence drops, we tend to spend less, which can slow the economy even more. This cycle of worry and caution can become self-fulfilling, leading to fewer jobs and more anxiety. On the flip side, confidence fuels spending and growth. That's why the Fed pays close attention to consumer sentiment. Even if your bank account looks fine, uncertainty can change your behavior. The recent dip in confidence is a warning sign, like clouds before a storm. Combined with slower retail sales, it shows Americans are becoming more cautious. The Fed hopes a rate cut will help restore some optimism. Will it be enough to turn things around? There's also political drama at the Fed. A federal appeals court just ruled against President Trump's attempt to remove Governor Lisa Cook from the Fed's board. The court said the allegations weren't enough to oust her, reinforcing the Fed's independence from political pressure. This means Governor Cook will help decide on interest rates at this crucial meeting. The White House may appeal, but for now, Cook stays. This legal fight highlights why the Fed's independence matters, so economic policy isn't swayed by politics. The court's decision keeps the Fed focused on what's best for the economy, not election cycles. For this week's meeting, all eyes are on the full board, including Cook. The outcome could shape policy for months to come. While the courts decided one governor's fate, another joined the Fed. The Senate narrowly confirmed Stephen Moran to the Board of Governors. He joins just in time for this high-stakes meeting, bringing a fresh perspective to the table. His vote will help decide whether rates are cut and by how much. The Fed's board is supposed to be nonpartisan, but Moran's confirmation was deeply divided. Now, with both a new and a contested governor, the board's decisions are under even more scrutiny. Every member's view matters as they debate the best path forward. The outcome will reflect this newly configured group. Shifting gears, let's talk about TikTok. After months of uncertainty, a deal may be close that would let TikTok keep operating in the US under new ownership. Oracle is leading a group to take over US operations, addressing security concerns about Chinese ownership. Details are still emerging. How will user data be protected? And what role will ByteDance play? For millions of users and creators, this is big news. It's also a major moment in global tech and business, showing how politics can reshape companies. Oracle's involvement marks a huge shift for the company. Everyone's waiting for the official announcement. Meanwhile, gold prices have hit a record high, nearing $3,700 an ounce. Investors flock to gold when they're anxious about the economy. It's a safe haven. Rising gold signals market nerves, while oil prices have dipped, showing a mixed outlook. In the stock market, Tesla shares jumped after Elon Musk bought $1 billion of his own company's stock, a big vote of confidence. Alphabet, Google's parent, also hit a new all-time high, pushing its value above $3 trillion. These moves show that even in uncertain times, tech giants are thriving. Investors are betting on innovation, even as they hedge with gold. The market is a mix of caution and excitement. Big shifts in gold and tech are shaping the financial landscape. We've covered a lot: the Fed, retail sales, political drama, TikTok, and big moves in gold and tech. These stories are all connected, and they all affect your daily life. The Fed's decision could change your loan rates and savings returns. Retail sales and consumer sentiment reflect the health of your community. The Fed's independence ensures stable, long-term economic policy. The TikTok deal shows how global tech issues impact millions of Americans. Gold's rise and tech's surge reveal both anxiety and optimism in the market. By staying informed, you can make smarter financial decisions. Understanding these forces helps you navigate uncertainty and seize opportunities. We'll be here to help you make sense of it all every step of the way.